Hi, this is Amur with the Bulletin Board Heroes here at Vox Markets for International Women's Day. Starting off with Amur Minerals, which seems to have decided that being the Russia threat is not such a threat anymore. What's interesting from a technical perspective is that shares managed a bear trap from below the old March 2020 low of 0.85, so narrow bear trap and then right back up again, filling the gap that the shares left around the 1.8 pence level, 1.9 pence level, and then coming back down again. So I suppose we want to see an end of day close through 1.9 to justify or to give us hope that the rally will continue. Otherwise, in the meantime, that would be resistance for the stock. In terms of potential support, I suppose back at 1.2, 1.3, which was near yesterday's high, the potential support there for the shares. But at the moment, pretty emphatic rebound for the stock, suggesting that, or at least the market guessing that the Russia issue is not as serious as it appeared before, or that it could be resolved, I suppose. Moving along to Amigo, where we've had the happy situation of the shares overrunning the target that we were looking for. So 6 pence looked rather ambitious just a couple of days ago, but we managed to break that and also break up to the 200-day line at 8 pence. View now is that with the shares nearly filling the gap from November up at 10 pence, that's probably going to be the top of the latest move. Anything above 10 pence, really a bonus at this stage. If you're trying to run the position, then you'd be looking for the resistance from yesterday around 6.75 as the potential stop loss zone. But obviously that stock is not exactly a quiet market and very volatile indeed. Moving along to Egdon, which seems to have snapped back really strongly from basically the end of last week. Looks as though we bounced off the floor of a rising trend channel, and the trend channel is one from back in September. Top of the channel there heading for 4.1 pence or so, and that's valid while we hold above around the 2.25 area, basically today's support area. So looking for 4 pence maybe by the end of next month. Eurasia always provides entertainment of one kind or the other on a technical basis, and we had the gap down, I suppose, at the end of last month. What's interesting now is that the low in the end of last month around the 8.6 pence area, that looks as though that's come in as new support today. That 8 pence area was also the initial gap, I think it was in 2020, so that's also a big number for the stock. Overshoot on the downside, but we've hit the floor of that falling trend channel from June, just around the 5.5 area. But at least in the meantime, while we're above 8.5, got the chance of filling the gap up to 15 pence plus as a best case scenario, especially if the shares do what the equivalent of what Amur has done today. The other positive, obviously one's looking for positives here, given the sell-off that we've had, is that we've got a bullish divergence line there. So the lower price that we had for March, not matched by a lower RSI trace. So that's a bullish divergence line that could give the shares some momentum. But at the moment, I suppose 15, 16, the best on offer while we hold above the 8 pence area. I think that's the best roadmap at the moment. On to Evraz, another Russia-affected situation, obviously. Here we noted the bullish divergence a couple of days ago, and that's helped the stock to some extent. A bit disappointing that we haven't managed an end-of-day close back above the Friday high at 96 pence. That's what we really need to give us the fresh target, maybe up towards 150 plus for the stock. So a lot at stake in terms of the shares closing above 96 pence, i.e. where they are at the moment, or higher over the next day or two. Stock which has been requested by multiple parties, all very keen on this one. GSTechnologies, not surprising, I suppose, given the rally that we had here back in October. That was a very decent move, and since then we've been consolidating, largely in the, I suppose, 1.5 to 2.5 area. But at the moment we've had a bear trap below the old February support. That was around 1.4 pence, and above that I think we're looking for, ideally, a return to the top of the recent range at 2.5p. If you're cautious on the shares, maybe wait for an end-of-day close above the 50-day moving average. That's around the 1.85p level. So breaking that line of resistance there from October, and the 50-day line could give us a 2.5p again. And I think that would not be expecting too much, especially given the way that we've got a bullish divergence line there in the RSI window, which should provide a decent momentum over and above today's announcement. On to a stock which has been serving up the goods for the bulls over the recent past. And good to see that Harvest Minerals, if I can get it up on the screen, has overshot its target. So we have looking for 12p initially, 13p, and we're way above that now. At the top of that channel from back in April last year, heading towards the 18p level, and we're looking for 18p plus over the next 4 to 6 weeks while we hold above the 12p level. 50 and 200-day moving averages rising very well, and very little retracement on the intraday bars. Moving along to Hurricane, which is understandably, with oil through the roof, doing rather well at the moment. Here, very similar chart to that of Harvest Minerals. The view here is above 8p, which is basically the middle of that flag from the middle of last month. We should head up to a resistance line there from August as high as 13p over the next month or so. Very similar chart, as I said, to that of Harvest Minerals. Another stock beginning with H, which is doing well at the moment, is Hummingbird, and the reason here is probably one of the more subtle setups, and one of my favourite setups, I suppose. We had the gap down there in November, gap higher last month. We found support at the top of the gap there at around 13.5p, and above that, and the floor of that rising trend channel from October, looking for 21p, perhaps as soon as the end of next month. But that's like an inverted head and shoulders, and also a very, very strong pattern when you have a gap higher and support comes in either above the top of the gap or at the top of the gap. So that's what we're looking at Hummingbird. The final plus point there is the way that the 50-day moving average is rising at the top of the range, at the bottom of the range rather. Again, another positive signal and a decent reversal signal. I covered Igas, I think, last week. Bit of jiggery-pokery either side of 20p, but above the mid-February peak at 19. We're still looking for that April resistance line projection target at 33p, perhaps as soon as the end of next month. We've got a bullish divergence line there, or an uptrend line there in the RSI window, which helps too. I haven't looked at Metal Tiger for quite a while, and you can see from the chart why I might not have done that, but there is a solid RSI support line of which the shares have bounced many times, and we're just breaking out of this falling wedge from back in May and breaking the 50-day moving average around 19.5p. Above that, looking for a return to October resistance at 25, 26p by the end of next month. But it could be the end of a very long consolidation for those shares. Not particularly a fan of trying to bottom fish pandemic stocks, but the technicals have to be taken note of. Here with Novacyt, we've got this bullish divergence line, so the low for March, but a higher RSI trace, and also we're attempting to break that line of resistance from last month. Let's call it £1.43, and we can call it about £1.40. Above 140, we've got the chance of recovery at least towards the 170s, backed by the bullish divergence line. So let's see if that works out well. Finishing off with a bear trap situation here. Well, it looks like a bear trap situation. We've got Zinnwald. 1 day bear trap below the old December low there at 13.5p above that. We're hoping for a move towards the upper teens, so maybe 18, 19, that kind of figure over the next 4 weeks or so. But nice stop loss there, and always good to see a bullish divergence line backing the bear trap as well on Zinnwald. That's it for me today. More updates tomorrow.